Alrighty, guys. Welcome to this Tuesday, February 4th. The little deal with Canada came together after the close yesterday. So I saw a little pop at the very end there. That was that. We closed out on a high note. So both Mexico, Canada, basically back 30-day reprieve on tariffs, and we'll see. What else they're going to have to come up with before they are that whole thing settles out. There's still a threat of tariffs. It's a 30 delayed 30 days. We'll see if they do what they've been asked to do, shut their borders and all that stuff. So we'll find out. But the tariff threat is gone for those two. China, that's on. They didn't do anything. They retaliated, and I guess that's heating up then. So it's not completely unexpected either. At this point, we had a pretty interesting close, a strong close. They were up here, right up here, the 60 55s. Overnight, look at it overnight. What a roller coaster that has been. They started pop a little bit to the upside and all the way back down here to the 59.85s and right back up again. And then we're kind of in the middle of yesterday's session. So a pretty good roller coaster in the overnight. Going into the news this morning, not much going on at 8:30. Nothing really. The only thing we have at 10 o'clock is factory orders and the job opening report. Then we have Bostic speaking, Daly speaking, and Jefferson speaking as well. Jefferson's late, so Bostic at 11, Daly at 2, Eastern, that is. So news at 10. A couple of Fed speakers today. That's about it for news. So I don't think that's going to be necessary. I mean, at 10 o'clock, just pay attention. It's going to be maybe a little bit of reaction. I don't think these two numbers are really going to make a huge difference, especially in light of the volatility right now has been driven by foreign policy and tariffs, put it that way. Even if it should be off the table, I'm just surprised that the rotation in the overnight was that big. That's a pretty freaking big one. So if you traded the overnight, you had a lot of stuff going on. So that just tells you how volatile it is. So they were down almost from 60 down to the 80s. So they were down like 80 points down and then all 60 points back up again. It's a pretty good rotation. But as you can see in the bigger picture, my mode is right here at 6,025. That's kind of where we are trading. So all this stuff here, if I start folding that together, you're probably going to start seeing a big distribution forming here. But I think we still have a pretty good area of resistance at that 6,040 level. We keep crossing it, but and that's the more you actually do that, the less important it becomes. But there is a volume edge there, and I would still lean against that as an area I need to clear before we can really start seeing some movements to the upside. So folding this stuff together like this and that got like that, we start seeing that, okay, so around this edge and not as obvious in this latest distribution, but I am still leaning against it. And there is a volume edge right there, there's a small low volume area right above it, and that still stalls activity, even if it's not as strong as it used to be. So that's how you use the profile. So I mean, you split stuff out. It's like this. You figure out where you have this. Here you have a nice edge that now it becomes a lot more visible when you split that thing out. And I split there. There's a pretty good ledge here at the 55. So between 45s and 55s, we probably have a pretty good area to lean against as well. Anyway, so starting off range bound this morning, with if they had held at the highs, I would have probably started off on the long side. But since they were all the way down to the 85s, then right back up again, I'm not going to start off flat out range bound. I'm going to watch this 45, 55 area for short setups. Going to watch the lower edges, the 6,095s and the 59.85s for long setups. And let's see if they can break out of that range. So if they start taking out 85s, I would lean in on the short side. They start trading above the 45s. I'm going to start thinking long side of the market and looking for confirmation above 55 to 60 here. So that 60 area comes out. There may be a 6 at 70, maybe an area for a short as well, but a little bit less clear on the way up here where the edge actually is going to be at. But this whole area from the 45, 55 to 60 and this and the 70s could potentially hold. But if you get up all the way to 70s, you're right up here in this upper area distribution. So I would start leaning short already above the 45s. I started leaning long above the 45s, and but still look for potential shorts against the 55, 60s and the 70s, just in case. Excuse me. Just in case they do this run at a few levels above the obvious, right? So we're starting off range bound. Let's see if we're going to get any sort of directional move, or if it's going to be going back and forth there in some in some range bound fashion. So range bound ES to get started. Watch these upper edges, and the upper and lower edges for potential setups, and as for rotations back to this area, this 6,020 to 25s. So that's the ES to get started. Looking at our bonds and the NASDAQ, the bond market is not giving us any big hints any one way or the other. They're a little bit to the downside. Yesterday we were up, they backed off a little bit, they're down to the 24s. In the bigger picture, they are just pretty much back to value. So this little attractor area around the 113, 24 to 114s is where they're trading right now. We were up here a couple of times against the 115s, but could not break above that low volume area. And see how strong that is. That you don't pay attention. And people keep talking about high volume attractor areas, but they forget about these low volume areas, which are flat out to stall activity. So if they can get past it, yeah, they have a good shot at getting up to this 116s, but you see how they have effectively they block activity, and then basically and now we're backing off down here to the 114s. So starting off range bound on the bonds around the 114s. Looking to sell strength at this point against the 11409s. Looking to buy weakness 1320 down to the 1310s, maybe down to the 1305s for rotations back up. But this is pretty much that high volume area. The time they spent up here was definitely looking like they were having a shot at taking this out. And you had this big pop here yesterday when the first tariff announcement came, but that still doesn't really count. That was reversed so quick that wasn't even funny. So starting off range bound on the bonds as well. Let's see what kind of direction we're going to get. So I'm basically looking to see how these cross currents are settling in. And now we have two tariff threats past us. Looking at the NASDAQ, also pretty much trading in this lower range. They were not as strong in terms of heading back up again. They need to get back above that 21,800s before we really get excited about the long side again. You can see that again, low volume area at the 800s, stall activity. They had one probe here there one day, the day before this whole debacle. So that was Friday's trading. They started off high, started retracing all the way back down again into the close, and then of course on Monday they had this big sell-off, gap down and sell-off. Right now we're trading in this lower range. And you can see here we have a volume edge down at the 21,150s. We have one up here at the 21,800s, and we have pretty much been going back and forth in this area. So going to start range bound, looking to sell strength all the way up to the 21,800s and buying weakness all the way down to the 21,150s for rotations back to that midpoint. So that's it, the bigger picture. And at this point, to get started, initially we're looking for shorts against the 21,500s, the 580s, and the 620s. We're going to buy against the 425s, 380s, 350s, 300s down to the 250s for rotations back up. If the trade below that 250s, I think we have a shot at heading back down and testing those very lows. But it's here you have that volume edge start kicking in, and here you have that 150. So interesting edge down here. But this lower edge is pretty strong as well. So looking to buy weakness all the way down to that to 240 to get started, looking to sell strength all the way up to the 620s. To start heading above the 620s, I think we have a shot potentially to move up towards the 21,800s. So anyone's guess, because this is a pretty good area. So if they can start get a little bit of traction here and get clear that 21,520 midpoint, we may have a shot at running it up here to the 21,800s. We'll see if it can materialize. But in the bigger picture, the 21,800s way up here and the 21,150s are the outer edges to lean against. And then there's a lot of range here. So if they start to taking out a few levels on the upside, you can start thinking about a long trade, see how far they can take it. Same thing on the downside. If they start taking out 2, maybe 3 levels on the downside, you can start looking for a short move down all the way down to these lower edges down at the 21,150s, all the way down here at these lower areas. However, just be mindful if you're going to get on a short or a long and do a directional move. You have to make sure you don't sell into support or buy into resistance. That is, those are the two big values on having these edge ranges drawn out on your chart like that. If you ever wonder why as soon as you get in a trade, the whole market stops, it's just exactly what you did there. You bought into resistance, you sold into support. So, but anyway, starting off range bound on the ES and NASDAQ. Let's see what kind of direction we're going to get out of this. With the roller coaster in the overnight, it's just anyone's guess how it's going to go. Usually, if it had been holding around an area, you kind of have some sort of a direction in mind. But with that kind of roller coaster, it can go either which way. Looking at gold and oil. So gold, pretty much range bound right now. They're stuck around the 2850s, and it has been a pretty darn good move to the upside. They gapped up on the rollover. They ran it all the way up here to 2850, and as you can see, they are stalled right there. So no attempt to close that gap. I'm going to be looking for that at one point, but so far I'm not seeing it. One move down here the other day did not quite make it. So back up to 2850, and I would trade it as a range bound market around that high volume area. So looking to sell strength 28.55, 28.58, 63 for rotations back down. Looking to buy against support 44s, 37s, 38 or 32s, and 27s. So below 27, I would start thinking about maybe a rotation down. And above the 63s, I would look for a potential breakout to the upside. So that's kind of the range I'm looking at on the gold. So outer edge 63, lower edge is the 26s or 27s. All right. So that's gold, traded as a range bound market around 28.50. And then oil. Okay, finally a little bit of moves to the downside, huh? Finally starting to work itself down, and this is going to be the path for oil. It's not going to, unless you get something we had with a tariff threat, right, or a tariff scenario. That would have been a tax on oil, or that would have been definitely pushing it higher. But outside of stuff like that, all the policies are going to drive oil lower. And we started a little pop here is the last gas of the previous administration trying to mess things up. And now as they start changing these policies, oil is going to start coming down. And with that, pretty much everything else. You're going to get the lesson in how important energy prices are for pretty much everything in society. But anyway, so at this point, I would trade oil from the short side, looking to sell strength. 71, 75, 72, up to the 72.50s. Above 72.50, I'll take off the long bias and just go back range bound. So, or short bias and go back range bound. Short bias to get started. So looking to sell strength above 72, 40 to 50, see if we take off that short bias. And remember, the reason range bound with a bias to the downside is that you get days like the other day, they run it higher, they go range bound, they go lower, then they retrace a bit, it's just not a straight line down. So it's going to be this rocky road, I guess, to deal with. But overall, I would keep trading it from the short side whenever possible. All right, so that's oil. Looking to trade on that from the short side or range bound with a short bias, and gold range bound. And back to the ES. And so far, all right, we see kind of holding where we left it. So let's see if we're going to get any sort of direction coming out of this, or if they're just going to keep trading in this range in more of a holding pattern. So the big news for the week comes on Friday. So that's going to be the employment situation. But let's see what happens. So far, I'm seeing a lot of volatility though. So bars are big and same dynamic as yesterday. So yes, plan for that. Alrighty, I'll wrap it there, guys. So good trading, and I'll see you back at 11:30 for the next update. Later.